A market collapse often implies a sharp retracement. Today is August 14th, and the market has had its collapse after our last video. That Monday was a huge down day with the yen carry trade triggering this event. And the market has rallied ever since. And usually a market, when it rallies back 61% of the way to the highs, that is usually a place to sell and to assume continuing on the downside. The market will continue on the downside. In this case, however, there's reason to think that the market will actually rally further and reach above the 5,600 level, and even if it does so, go down after that anyway. All it's doing is kind of rebalancing the intensity of the decline with the intensity of this rally. It also is ultimately a short covering rally. Everybody is reshorting and losing on the rally, And so look at what we have here. We have a picture of what's happened the last 3-4 weeks on the S&P, and this is an hourly chart on the S&P. And you can see in this chart that basically it has retraced approximately 61% of the way back to the highs. And that, of course, the price there would be 54.91 would be the resistance level. And we almost reached that today at 54.87. The timing is very similar to what we expected. We thought there'd be a high between the 9th and the 15th, and it turns out tomorrow's the 15th. So we're looking for a high very soon. However, the price action is likely to be more than expected. Ordinarily, at this point, you could see a 61% retracement, and that's a resistance of significance. And we also have a downtrend line that came off the highs, which is right at the same level, around 5,500. And ordinarily, this would be an ideal place to go short and can assume the continuation on the downside. However, the pattern is more likely to retrace back above the beginning of that last collapse point on July 31st, which is above 5,600 beforehand. Why do I say that? Well, first of all, it's very common for markets that crater the way this one did in 3 days to immediately have some very, very dramatic balancing that goes on and oftentimes take away all of the decline. And then you think it's going up, and turns out it is not. Last year, we have the 49-week cycle we've been talking about forever. 49 weeks ago, the market had a similar pattern where it fell pretty hard into the equivalent of the August 5th that we have now. It was 49 weeks earlier. And then it rallied exactly where we would expect. It went above the ledge that the prior collapse took place from. And if you look at other markets, look at Apple, most recent behavior since the highs. Apple is almost made its way back to that ledge that the prior collapse took place. So in terms of timing, it's very much what we were thinking. The pattern is likely to go a little bit higher for possibly a few more days. We were thinking the 15th, but the exaggerated volatility is probably going to keep the market up a little longer. We also have found that Mercury has been retrograde since the day of the low. And when Mercury is retrograde, or any planet is retrograde, and the market collapses into that point, it usually will find support and tend to reverse to the upside. Now, the important thing is Mercury is retrograde until the 27th of August. And if you look at the 49-week cycle, you see here is a high coming in possibly the next day, maybe even Monday, the 19th, before it starts to go down, and has a second high around the 25th or 26th of August. In that case, it was a lower high. And then the market proceeded on its merry way back down. We expect this type of behavior, that we're going to make a high here, probably higher than the Fibonacci resistance at 54.91, possibly as high as 56.20. And then it's going to come sharply down for a few days, but then bounce back into as late as the 25th or 26th of August and make a lower high probably, and then fall apart. If you look at 1998, the price action isn't identical, but we had the same dates. the low in August 5th, and then there was a high on August 19th, which would be the equivalent of Monday this year, and had another high on the 25th, 26th of August before the next leg really took off to the downside. We still expect a big decline. We still expect continuation into October lows, but this volatility, because of the excessive volatility, is likely to create bigger swings in both directions. And right now, I think it's going to break through what would ordinarily be a wonderful shorting opportunity where the market is right now at the 61% retracement, very, very close to the time point that we were exhibiting, or that we were explaining was likely to be a high point. So that's our immediate forecast. Now, why, aside from the Mercury retrograde, there's another thing that's happened. It just happened today on the 14th of August. Mars and Jupiter are conjunct. And we checked prior Mars-Jupiter conjunctions, and they're not always bullish, but 71% of them were bullish over the last about 50 years. And therefore, there's likely to be another level of push to take the market price-wise higher. The bigger trend is likely to still be down, but the volatility on the upside, and shorting this will be a little more difficult than we had initially anticipated based upon the 1998 pattern. The timing, however, is very, very similar, both to the 49-week cycle and to the 26-year cycle. And if indeed we continue to behave that way, we will see at least lower lows, maybe not much lower, because there is support around the 5100 area. It's going to have a hard time breaking the 5100 area in order to go down to the next support level. What we're describing here is information for the swing traders. It's not day trading information. Basically, the idea here is the market's more extremely volatile on the upside than you might expect, and so I wouldn't get overly attached to getting short unless there's clear indication tomorrow or the next day that the market is reversing. If it starts to break above that trend line at that 5500 line and above the 5491, which is the same area, be very circumspect and careful, because we could shoot up another 150 points before the end of the rally. And even if it goes all the way back up there, the probabilities are still good that we're going to see it come down and take out those lows by October. Additionally, we have some very good price projection information. The matrix channel indicator, which we use and we've been displaying for the day traders on our website, is also available, or is also calculable on the daily level, which is more for investment level, longer term investments. And if you look back at this thing, it has been remarkable. There are basically two lines, the yellow line and the purple line here, that are bounding all of the major up and down moves all the way back to 2020 and before. The high in 2020 and the low in 2020 on that crash, they both were right on our lines. The high in 2022 and the low in 2023 were right on our lines. Right now we're in between major lines, and you can see the yellow curve underneath the market. That matrix curve is and was supporting the market when it collapsed on the 5th of August. And that market will have a hard time, our market will have a hard time breaking through that. And it may take a few iterations, it may take some time to do so. However, the next support, the blue-purple line, is at 4750, and 4750 would match the 16% correction that happened in 1998, which has been one of the preferred models that we're looking at. So right now we're looking at a variation of a decline, which is still a bearish decline until October. It may shoot up higher than expected. The rally here may last until the 26th or 27th of August, although probably it won't be the highest high. It may be a secondary high when Mercury turns direct again. And we're looking for additional decline all the way through until October 11th. And if indeed we can break the 5100 area, which will probably happen, it'll go to the 4700 area by the end of our couple of month correction here. Also, we started our most recent Trade Forecast Mastery class last week, And sometimes people can't always start at the right time. They're unavailable for the first lesson. So I'm offering another opportunity to take session 1 sometime this week before next Sunday, when session 2 will start, and then there won't be an opportunity to start. So if you're interested, you can still register and take the class. It's a 3-month commitment, and it's a very in-depth, very powerful, and very rich program.